The first question is, why invest in real estate? There are two good reasons to invest in real estate. The first is wealth preservation. And the second is to generate an inflation-proof income. So why wealth preservation? I pulled up from Bloomberg a very interesting data series, which is the price of an average house in the UK, in London. And I went back as much as I could where there was a data series available. So I went back to 1968, and the 1st of April 1968. And I saw that to buy a house in London at the time, it was £4,418. Then I looked at the current value, and today the average price of a house in London, it's £494,673. So pretty much the same property. Of course, it will be a little bit more modern, this property, but pretty much the same asset. So why is it that over 53 years, the value has increased so much? Well, the answer is very simple. It's the debasement of fiat currency. So since the beginning of the 70s, the central banks started printing money, and the more money they were printing, the more money was available. And everything started increasing in price, including real estate. The thing is that if you had £4,418 in 1968 and you put them into a bank, today still worth £4,418. Okay, if you bought a house, that house now will be worth £494,000. Interestingly, if you measure the price of that house in ounces of gold, you will see that the number or the weight of the gold to buy a house hasn't really changed much over the same period. So that tells you that the relative value has remained the same. You've just become poorer if you were holding financial assets, and you've managed to preserve your wealth if you invested in real assets. So this is the fundamental lesson or the reasons of why you would hold real estate. It preserves your wealth. And the headlines of rising inflations are everywhere. We don't know how persistent and how high this inflation will be in the next few years. But even a moderate rate of inflation, like 3 or 4%, over a long period of time, like 10, 20, 30 years, is sufficient to destroy your wealth, your financial wealth. So real estate remains an alternative. Then we look at the second good reason to invest in real estate, which is generating an inflation-proof income. So here I've taken the yield of real estate properties in the US. So we moved from the UK to the US, and I compare it to an assumed long-term rate of inflation of 2%. Currently, inflation is running much higher. I mean, the headlines for this week was of inflation running at 5%, but that's considered a transitory, short-term level. We don't know where it will settle, but if we assume that it will settle between 2 and 3%, that gives us a benchmark to beat. Well, right now, whether you are investing in offices, in residential, which is in the US they call multifamily, in the retail sector, in the industrial, or in the medical office sector, you are generating an income which is higher than the inflation. I just didn't compare it to the interest rates in the US, which are currently running at about 1.55%. That's for a 10 years treasury. I could also compare it to the yield that the high grade Sukuk generates. And what we have here is obviously a much higher yield that can be generated via real estate. Now, what is important of the income generated by real estate, it is inflation proof, meaning that it is not static, it's not fixed. It increases with the level of rent, and rents increase because they tend to follow the inflation. Of course, if the dynamics of a specific sector, like in these days, the industrial sector, which is benefit from the tailwind of e-commerce, then the rate of growth of the rents will be even higher than the inflation. But the bottom line is that inflation causes the rent to grow and causes the income, the yield on the initial investment in a real estate asset to grow. Okay, so this is a snapshot of the current yields today. But if you buy an asset today and you hold it for 10, 15, 20 years, you will see that the income relative to your original cost will increase. Of course, the value of your investment will also increase. Now, what are the two bad reasons to invest in real estate? 10, 15 years ago, we had a housing bubble, okay? And and people lost money. I mean, people investing in the West, in the UK, US, in Europe, they lost money, a little bit less, but certainly in the US and UK, the losses were severe. Then following that, people investing in the Dubai residential market lost money. And before that, even people investing in the Tigers, this is like the tail end of the 90s, they lost money there. So why do people lose money? Well, because they want to make a quick profit and they want a liquid investment. So if you go with these premises into real estate, most probably you will lose money. Quick profits are usually done through highly leveraged speculative developments. And in general, the use of high leverage, even if it is Sharia compliant, is not really advised when investing in real estate. And also to use real estate as an alternative to your Sukuk portfolio, something that you think that you can easily get out if you need liquidity. That's also a very wrong reason to invest in real estate. So, it takes time to develop a property. So if you go into the development business, you want to build the assets that will generate an income, you need to consider that first, it will take you between 4 and 5 years just to get the planning permission. Okay, so you buy the land. Before you are able to build on that land, it will take you 4 to 5 years. That's a very but buying land without planning permission, of course, it's a very smart thing to do. Okay, but be careful in being dragged into schemes of development schemes when there is no planning permission, because it might take you 4 to 5 years to get the planning permission, or might not get it, and you just end up with a piece of agricultural land that you probably have overpaid. It takes 2 to 3 years to properly build something. So 5 plus 3, we are already 8 years. And then to rent out the property to generate an income, which is one of the ways of generating a profit from a property. The other obviously will be to sell it. But we are talking about investing in real estate as an alternative to savings. Okay, so you want to rent out your property. It might take you easily between 6 months and 12 months to fill up your property. So you have 5 years to obtain the planning permission, 3 years to construct, and another 12 months to rent out. It may take 9 years to generate an income on a property. So, of course, you can acquire properties which are fully income generating, and that will have a very high price, so the yield will be very low. Or you can start a program of construction. Within 2 to 3 years, you should have an income generating portfolio. I would typically avoid going to the pre-planning when I invest, because I need to, in my funds, I need to generate an income within a short period of time of receiving a subscription. But of course, there are other investment strategies that take a much longer, they have a much longer investment horizons and much higher expected returns. If you were, however, opting for selling a property, you might need to consider how long it will take you to sell a property. And luckily today, we have precise statistics on the time that takes you to sell a property. And this changes from time to time. For example, in London these days, it takes you 57 days to sell a property. So almost 2 months, I would say. Still not a good, I mean, still too long if you are using your property as I mean, you are expecting short-term liquidity. If you think about what happened in 2020 when we had the lockdown, then the time elongated. I mean, it could have taken even 6-7 months to sell a property. Why? Because you were in a lockdown, your buyer is in lockdown, your lawyers are in lockdown, your surveyor are in lockdown. So it could have taken very long. I mean, commercial properties were slightly easier to sell because the agents came up with virtual tools, and now also the residential properties, but still the properties are something that you want to really have a feeling before you buy them. So you for the foreseeable future, you will be subject to potential delays. I don't know if there is a resurgence of the virus, international travels are restricted. So certainly you don't want to use property as an asset class to flip, okay, and to make a quick profit whilst the development is ongoing.